very, very good morning to all of you. And, thanks a lot for idly coming in and making a wonderful conference today. We have our senior partners here. We have our, partners from various areas all together. When I was told to actually speak as a keynote, I thought, what keynote, what anecdote would I ideally give to the CFOs? And how do I take the ideally the inspiration, where do I derive my inspiration? Now, I am an avid, now Janmashtami is just off the record, it's just coming in few days. I derive my inspiration from the Bhagavad Gita. I have been reading that on a very regular basis. And I thought, why not to take some anecdotes from there and understand it from that perspective, that how CFOs have been evolving over a period of time. So my topic is ideally CFO 3.0. Now, people will say, what is 1.0, what is 2.0, and what is 3.0? So I'll take you to ideally there first. That's about me. So I am national leader, transaction advisory. I take care of M&A, valuation, due diligence, and those areas per se. So now let's talk about what is, evolution of a CFO. So who is a CFO? Now, there's so many definitions we got. We got one from the last panel, which was Chief Facilitating Officer. That was one of that. Chief Financial Officer, we all know, and we'll get to know about more of them through this presentation. Now, how the evolution of CFO has happened over a period of time, where CFOs have been taking their inspiration from. CFO 1.0. CFO 1.0 has been taking inspiration from Kuber. Kuber, or you can always say Chitragupt. Chitragupt, the one who used to take the records, maintain the records of all of the people. That's what CFO 1.0 used to do. He was a good treasurer from the very starting. He used to take care of the money really well. He knew where the money is coming from, where the money is going out, but he always kept quiet. You will never hear Kuber said anything, or there's a saying by Kuber. Kuber never said anything. Kuber always did. So they're working in silos. So ideally, Kuber was best in record keeping. He was working in silos. He was risk averse, conservator, and he was keeper of trust. All the gods used to keep his money with them. He was like a Swiss bank for them. He knew all the in and outs. He knew where the tax is going. He knew everything. But Kuber said nothing. Yeah. Came number 2, CFO 2.0, Arjun. Wonderful guy. Led the whole Mahabharata all together. But had one thing, that he needed guidance. The whole Bhagavad Gita is what guidance to Arjun by Krishna. So the point of view is, he was a great coordinator. He is a great team worker. He is a disciplined performer. He is a keeper of trust, because a lot of people kept trust with him. He was ideally friend to Krishna. And, he was one person who was ideally guided, and he was open for guidance. Now, he just not needed guidance. He was open for guidance. So, even in the Gita, he always asked, if you people have read that, he always used to ask, can you tell me one thing? I leave this to you. I surrender myself to you. He's sitting in a battlefield. And he tells Krishna, I am surrendering upon to you. You tell me what I should do after this. Yeah. Now, with that learning, we understand that he knew everything. He was a wonderful guy. He was leading a very big team. He knew where to shoot and when to shoot and who to shoot, but he had to take guidance altogether. He couldn't do it himself at that mode of time. So that's where CFO 2.0 came from. So CFO 2.0 are not Arjun. CFO 1.0 is not Kuber. They're deriving their inspiration from them, because CFO 3.0, you will say, how can you say this? Is Vishnu. Now CFO 3.0 is ideally cosmic strategist guiding towards optimal. Now, why is Vishnu 3.0? The most important thing is multi-form adaptability. He can be Krishna, he can be Ram, he can be Narsingha. He can be anything. So he can change his forms altogether. So that's what is needed. You need to adapt to AI on one day. You're already having so much reporting cadence. You need to do quarterly financials, half-yearly financial, and then comes non-financial reporting, ESG. BRSR reporting you need to start doing. Now, who is doing BRSR reporting? The OGs of the reporting, The original gangsters, the CFOs, have to do ESG. The CFOs have to do AI. The CFOs have to do investor grievance reporting. The CFO has to do investor reports. CFO has to do all of those things. So therefore, a multi-form adaptability is needed. And then foresight and intervention. In the last, one of the presenter idly said, from reactive to proactive and then to preactive. Yeah. So you have that saying, yada yada dharmasya glanir bharti bhavta abhyuttanam dharmasya tadadmanam sejamyam and then paritranayam. So that what it says is, whenever there is a problem, I come. And he is preactive. He knows where to do, what to do and where to do. So therefore, you derive inspiration from Vishnu. You're not a Vishnu, yeah? You're not Arjun. You're not Kuber. So, and you're not Chitragupta as well. You are deriving your inspirations from there. So you need to ideally derive your inspiration from CFO 1.0 to maybe CFO 2.0 and then maybe moving on to CFO 3.0. So that's where CFO 3.0 is the definition of my keynote presentations come from. Now, is it still Chief Financial Officer? Chief Financial Officer has to limit himself to the finance. But is he doing that? He has to look at the financial oversight. He has to look at the strategic foresight. And he has to look at opportunity identification. Now, opportunity identification, Mr. Virappan very well said, he is actively involved in M&A. Do you know, we did a research into people. So I work with a lot of CFOs. We work across the country. We have around 30 partners in Kirtane and Pandit. And Kirtane and Pandit is part of an alliance, which is known as Samas now, which includes SS Kothari Mehta and Company, Kirtane and Pandit and Guru and Janak. With this, we are 70 partner, 3,000 employees. And we work across with at least 700 CFOs, bare minimum, to talk about. Personally, we know them and we talk to them. Upon discussion, I got to know with all my partners and the CFOs, till 2019, that is the pre-COVID period, only 25 to 30% of the CFOs, while we did this research and analysis with our CFOs, 25 to 30% of the CFOs were only actively involved in M&A. Most of the CFOs in the M&A used to get to know when the transaction was already done and you had to do the compliances now. Then the CFO used to take the call. I think Mr. Virappan would ideally agree to this. CFOs used to come into that form at that moment of time that when the transaction was already done, the discussion was already done, and now new documentation, shareholder agreement, share subscription agreement, all the transactions, going to the board, talking to them, and all of those things, do the filings and all of those things were needed. Then CFO used to come into the role. Now CFO comes to the role on day one. He is the one who brings the investor to the table. He is the one who is bringing the target to the table. He is the one who is doing the due diligence on day one. CFO is no more kept a person who is going to do the documentation later. He is kept as a person who will do the things in the start, who will ideally start the thing. So strategic foresight is needed. So maybe you can ideally call him Chief Foresight Opportunity Officer. So that's where my definition of CFO 3.0 would ideally be. Now, why the definition of CFO is ideally changing is because we work with so many CFOs. We feel your pain. Yeah. Let's talk about the pain. Now, we talk about all the time why the CFO is not accepting AI. Why the CFO is not accepting change. Why the CFO is not changing the system altogether. क्यों Tally use कर रहे हो यार अभी तक? क्यों Oracle use करते हो? क्यों नहीं SAP पर गए अभी तक? So many questions CFO gets from a lot of CEOs, from the new auditor. Whenever we enter, as a small auditor is already auditing, we get into the space, and what do we do? The first thing, how are you managing the inventory? We're doing it on Excel. Why are you doing it on Excel until now when there are so many forms of things available? So the first and foremost, we see one pain, which is the regulatory overload. In India, ease of doing business is wonderful. Yeah. You want to raise funds? Yeah. I do a lot of transactions in Delaware, US, as well as India. Now, when you do a transaction in India, you want to raise funds. What do you need to do? And let's say you're getting money from abroad. So what do you need to do? You need to get a board meeting done, appoint a registered valuer, appoint a merchant banker, appoint a chartered accountant, 3 different valuations, one for FEMA, one for Companies Act, one for Income Tax Act. Then go for an EGM, call all the shareholders, request for a early 95% approval for getting that. After EGM, get the approval, file pass 3, pass 4, pass 5, MJT 14 and all of those. The whole process takes 15 days to get the money in. And then you can't use the money until the approval is there from the MCA. Now you do that in US. That's so important. In US, it's so easy. You got the money, you got the money. You got the investor, you got the investors. Tell us at the end of the year, you're a closely held company. I'm talking about closely held company per se. For a listed company, obviously the compliances remain the same worldwide, globally. And I understand that for a listed company, definitely you need these things to ideally do. But that's the first thing. That's not the pain. That's just the tip of the, can I have the answer? Tip of the iceberg. Here comes the iceberg. First thing is the legacy systems. CFOs are bound to work with the same system which the owner is doing. So I'll not name the clients. One of the clients you're working with, the owner used to sign all these checks at the end of the day. My partners would ideally smile with that because they know the name. Yeah. So the owner used to sign the check at the end of the day every day. So there was one full statement which the owner used to sign. Even 7,000 rupees sign the owner used to sell. And this is a 10,000 crore company, bare minimum. So now this was the legacy system they had. When we entered, we were entered because one of the PE had invested into the company. They wanted us to change the SOP, the framework and all of those things. And wherein we came to change the legacy systems and we asked the CFO, why didn't you do it? So while we tried to do it, meanwhile, the CFO left the company. So we said, why you didn't do it? He told us, because you will also not be able to do it until the owner changes. Now that's the legacy system you have. Until the second generation won't come, the second generation won't allow. A lot of you will resonate. Bhai Malik hi nahi allow karta, to main kaise kar दूं? Now second is the reporting cadence. Reporting cadence is always a problem. You have quarterly filing, half-yearly filing, MIS, quarterly, half-yearly, monthly MIS, which you need to send across. So many things the CFO has to do every day. As per the research बोलने से क्या होता है लोग सुनते हैं. So as per the research, 60% of the time goes in the reporting for a CFO. Now, what's the solution for it? We'll also talk about. The next problem is budget constraints. Obviously, whenever you knock the door and you ask, I want to apply SAP, and they come with a proposal of 3 crore rupees for implementation. And then you say, I wanted to apply SAP, but I couldn't because the budget wasn't there. The second is, you wanted to do Oracle. Then you wanted to do SAP, you went to Oracle. You said, no, I don't want to do. You went to another ERP. You don't want to do. मैं Tally के साथ Excel चला लूँगा. मेरी problem solve हो गई, मेरा budget नहीं है. Now, then comes governance structure. In a listed company, there are so many committees which you need to take care of. Investor grievance committee, board committee, independent directors committee, so much to manage, and everyone is thinking in their own silos. Now, everyone is asking CFO about different questions and nobody is asking that question to the other committee. Now, one committee is already answering one question. Now, you answer that question to one committee. The same question will be asked by another committee to you itself, and you're answering the same question, because with the auditors, we also sit in all the committees. Then you sit in the third committee, they ask you the same question and you answer them, and you say that I have already answered this in 7 committees. How many committees I have to answer? Send me an email. I will send it across. But one committee can't send email to another committee because SEBI doesn't allow that. So that's the governance structure. Now, non-fund reporting disclosures. So, you're already burdened with so many fund disclosures and you still need to do ESG disclosures and all of those. And last but not the least is the talent gaps. We can do all of those. I can do legacy system, I can do reporting cadence, budget, governance, ESG disclosure, but talent kahan se laenge? Where do I find a talent? Every CFO has one problem. Ek acha banda GST ka de do yaar. Every CFO has one problem. यार ये इनकम टैक्स क्यों नहीं आता मेरे बंदे को? मैंने चार्टर्ड अकाउंटेंट रख लिया. मैं उसको जब क्वेश्चन पूछता हूँ वो चैट जीपीटी पे जाके गूगल करके मेरे को देता है. एंड चैट जीपीटी भी क्या करता है? हेलुसिनेट करता है. It also gives you case laws which are not there altogether. And then that's a talent gap. अब वो talent gap को cover करने के लिए वो talent बेचारा chat GPT पे गया answer ढूंढने के लिए, and what he got was a hallucinated case study and you couldn't do anything about it. So now let's talk about what the solution is. Achieving CFO 3.0. You need to have a tower to ideally, watchtower to ideally solve this. Technology first is the solution. We heard Ms. Sonia that they've appointed so much technology in their organization altogether. And because of that, the organization is running very fast. Even I'm sure JK Paper would be working on MIS, all other companies would be working on MIS. But you need to get out and choose maybe different systems. How many of you think this presentation was created by AI? Or was that created manually? Can I have a raise of hands for AI, please? Just one मेरे partners को पता है खुद बनाएगा ही नहीं. Two of them knows it. But that's not just AI. It's about me telling them and then AI creating it and then I'm changing it and then AI telling me. But that's what we do. Technology first is the first answer which you have. The second answer is the outside experts. A lot of us, because of the budget constraint, do not go to a consulting organization saying that GST की return तो मेरी team भर लेती है. Income tax का TDS तो मेरी team भर ही लेती है. And then, because we don't have a regular answer to it, what do we do next is, at the time we get the notice, we call a person and that person asks you the fees for the whole year, which you were ideally saving. Now, there's another problem with the team altogether. That problem with the team is, you don't have a CS at your organization and you don't want to ideally invest in it because आपको पता है, मैं रख भी लूंगा तो उसको वो काम नहीं आएगा जो मुझे करवाना है. मैं CA रख भी लूंगा, so he will be embroiled into so much thing that he'll not be able to do it. Yeah? Okay. So this way, you will have to build partnership. You would have to self-service dashboards. You need to do small pilots of different things. You want to do one thing, do a small pilot on one department, start doing to another, start doing to another. This way, you will be able to solve the problems. Achieving CFO 3.0 is also an option via, oh sorry, that's not the answer. So, can you have CFO role divided? Definitely. CFOs are now not just running the organization, they have their own team. What CFO needs to do? Have again Panch Pandav in their team. The first is ideally Arjun, which is the Chief Treasury Officer. In case you have a person who you think, maybe you are one of them, you want someone to be the Treasury Officer, you can ask one team member to be there. Until you will not disintegrate, you will not have the answer. Second is the BEAM, which is the Chief Risk Officer. So you need to have one of the Chief CRO. Now these are the new CXOs which are there in bigger companies. If you appoint new people and you give them a name like this, maybe not a Chief Risk Officer, but an Assistant Risk Officer or an Assistant Risk Officer Manager, he will know what he's supposed to do. And with the name comes the responsibility. The next is ideally Nakul, who is the Chief Data and Analytics. Now, you will not have people who will do AI, analytics, things like that. But until you don't name them, they won't take it. Last but not the least, but you will say Panchwa Kaifan. So, the fourth one is Sadev, which is the Chief Sustainability Officer, who will take care of the ESG and all of those other areas, which are non-fund related areas. And comes the Yudhishthir is the CFO, who need to take care of the things. I don't know if you're taking my pictures for the presentation, but thank you very much. So the last but not the least, some facts and figures, which I've already told. 80% of CFOs are taking active part in transaction advisory, and these area, you're ideally the real money man. You're doing the fund sourcing, you're doing treasury management, you're doing share capital management, ESOP, split bonus, you're doing inorganic growth. You are ideally doing post-deal integration. Now, on the transaction advisory front specifically, you're working on portfolio management, keeping a tab on the valuation overall portfolio. I have seen, last 10 seconds, I have seen so many times people taking decisions and calling CFO and asking, will this impact my valuation? If this decision can actually impact my valuation, so that's a valuation oversight which you need all together in the year. Any change which you are doing, whether it will change. Now, we had, our very friend from Wendy's, who ideally said he sold Wendy's when this was happening. So he knew the value is going up day by day, day by day, day by day. And he could imagine that this is the point when I can ideally sell. Now, that's what the CFO has to do. On the transaction advisory fund, you are looking at the fund sourcing. You are the one looking at the various investors. Who is investing in your peers? Who is investing into similar companies entering India? Those areas, treasury management, share capital, and then the valuation oversight. So that's about our organization altogether. And thank you very much for this presentation. Thank you.